Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Let's take a look again on the Great British Pound, because I think that today we could better take a look at the cable, because on the gold market actually we have discussed everything yesterday. Market still stands around the target area, so maybe it will show another spike to the 1790 that we have talked about in its daily target. But our OP on the follow time frame charts already has been hit, so you remember that as we talked about it yesterday. So this OP here has been hit perfectly. Now market stands in the pullback, so theoretically it could proceed higher to the 1790, its target of the butterfly on the daily chart, but mostly it's nothing new to say, so you could just move gradually your stops if you still keep the long position right below the recent lows. And currently today it's better to take a look at the cable, because on the cable it's a bit tricky situation, particularly because we've got yesterday on a daily chart, as you can see, bearish reversal candle. So by itself, bearish reversal candles suggest some downward continuation on the next few sessions at least, but sometimes they become the starting point of some significant actions on the market. It could be, for example, strong downward continuation. This moment is very important because currently cable stands at the point that is crucial for the bullish context. Don't forget that here we stand just in the minor reaction to the reaction after the minor target, and this reaction should not be too significant. Overall upward action was here not bad. It was straightforward, and some signs of the thrust exist here. The same is here as well. Recovery up from the drop here, the Brexit last safe. So and in general, reaction on the minor target should not be too significant, and currently market stands at the point that is, well, the maximum reaction that we could allow market to show in relation to the just COP target. On the OP target, if we would get the OP, we could say yes, it could be 50%, even 60%, and it's in general will keep the trend valid. But for the COP, reaction to the conference support on the daily, it's maximum that we could accept. Drop of this confluence, it will be irrational reaction on the minor target, and it will put under question overall bullish context and could suggest a deeper drop and changing of the shape of the pattern itself. Maybe later it will be some larger ABCD or something of that sort, but with the pattern that we have right now, it has the negative sign if price will drop this level down. And appearing of the reversal candle here, well, it's not good moment in general. Yes, we could suggest some kind of maybe double bottom here on the intraday charts, but anyway, appearing of the reversal candle brings more risk in the current context, in the current scenario. On the 4-hour time frame chart, that's the story that we discussed 2 days ago. That was our point where we consider taking the long position, and we say keep stops at the break-even, but first destination point definitely will be the confluence resistance 25.17, 25.50. Then some reaction could follow. Response of this resistance, because market hardly will break it immediately without no reaction. And indeed, market right now stands in this reaction. Currently, this reaction doesn't break yet the overall bullish context. It shows normal depth, nothing wrong with it, and the market still could continue upward continuation or up from here. But that's actually, in fact, the point where this should happen. Otherwise, we should be ready for a downward breakout. So on the hourly chart, here's what we have. Market on the way down. Where is my C point, guys? Market on the way down has completed this XOP target and creates an agreement with the major support. It's 24 to 14 on the hourly chart, I mean major. Here we have the double repo lookalike pattern, because overall thrusting action is not perfect, but we have 8 bars to the downside, close above the 3x3, close below, creating the new lows, and close above. That was confirmation candle for the double repo. This pattern makes relatively safe opportunity for taking the long position with the stops somewhere below the lows, and we suggest that market should show some pullback that would let you to move stops to the break even. But then you have to see what will happen. If market will return right back down and break this level, do not take any new longs, because don't forget that here is a reversal kind of action on the daily chart, and the daily chart overrules intraday patterns, intraday time frames. The higher time frame is the stronger patterns it has compared to the lower time frames. Also, take a look on the head and shoulders, on the double repo failure. If market will not reach this area around B points, will not form at least the 50% action of this recent downward action, turn down again, breaking these lows, it also will be a negative sign. Be prepared for taking out of these lows and probable challenging of the daily confidence support. That's what we have on the daily chart. So, that's what we have on the intraday charts, on the cable, and in general on the Great British Pound. Depending on what positions do you have and what trades you plan, take into consideration the things that we said. If you would like to buy with the bet on the possible upward continuation and the bet of this reversal here and upward continuation, that's the point where you have to make the decision, because at least this area is good enough that could let you to move stops to the break even. If you search a chance to go short, in this case you will have to wait when this area will be broken and market starts downward continuation. Well, if you keep longs right from these bottoms, you could probably keep them, move stops then below these lows, and think about take some profit on the position somewhere in the middle of this action. Well, maybe, or at least move stops higher. So that's what we have currently, and keep an eye on this price action today, because it will make clear what to expect tomorrow and in the shorter term on the cable, whether this confidence support will hold or not, because that is a vital area for a bullish context on the daily. It's very important, and the things that we have currently on the intraday charts will clarify what will happen with this confidence, I suppose.